I think we have a very important thing to cover here in this video. Specifically, it looks clear this next upcoming week is going to be a pretty rough week. Now, there's one thing you need to be watching for that could turn this decline, that could be a correction, into a much larger crash. Couple warning signs that I've been seeing for a while and talking about for a while that I do want to give you as well, and overall my expectations here as far as I can reasonably predict out based on the information that we currently have. Long story short, this could be the difference between a correction, slight downside, or a full-blown crash. And then I also will give you my expectations for Tesla stock in this upcoming week. And one of these scenarios could be very positive for Tesla stock. One of the other scenario could be very, very negative. And I'm just going to put it out there as straight as possible to you guys. Momentum's powerful. We've talked about this before. There's been a lot of momentum to the upside. Fundamentals have gotten disconnected to where the stocks are at, right? The stocks have ran a lot more than the fundamentals suggest they should have. Okay, that's one thing. You get a correction in the market, stocks kind of come back to reality, all is fine, all is great. A correction. The thing you want to be watching for, the difference that will make all the difference, whether this is a correction or a crash, is what happens with the economy. On Friday, part of the reason I believe your AI stocks, your semiconductors rolled over is because the unemployment rate unexpectedly went from 3.7%, that was the estimate, the same as last month, we were expecting no change, and it jumped to 3.9%, the highest it has been since January of 2022. So I think to some degree, a 5 to 10% correction in the markets would be fine, would actually be a very bullish thing for Tesla stock and for your other small cap stocks. The question really is, and I'm just going to put it out there for you guys, does the economy stay strong? If the economy gets weak from here and things continue to look downwards pointing, right? A downwards trajectory on the economy, that's where this turns into a full-on crash. Let me give you a little bit of a backdrop here. 2023 was great. Strong economy, inflation coming down. 2024 really has been quite the opposite. The economy is starting to weaken. Inflation has been rising. That's why this week's CPI report will be so important, and retail sales. We're going to get the economy and we're going to get CPI, right? What the inflation outlook looks like and what the economic outlook looks like. So what you got on Friday was your unemployment rate unexpectedly spiked to a 2-year high, to 3.9%. I think that's part of why momentum stocks got killed the way that they did. Your high flyers, your AI, your semiconductor names on Friday, because that was a small start of pricing in recession risk. And that's the thing here. If the data comes in good, strong economy, low inflation or inflation falling again, then I think this is a 5 to 10% correction in the markets and could be very healthy. But what you've seen lately is quite strange, because let's say if, right, the consensus is we're having a soft landing, inflation is coming down, the Fed can cut when they want, but they're going to cut 3-4 times in 2024. That, in theory, should be a very positive thing for small and mid-cap stocks. Whereas you look at the percent of stocks above their 50-day moving average, and it hasn't been good, right? You peaked out at 86% back here on December 28th. And that was very historically high. From November 2023 through December of 2023, that 2-month period, you had a very historic rally in the markets. The S&P and the NASDAQ have continued to climb. Your average stock has actually fallen. Only 56% of stocks are actually above their 50-day moving average. That's not a very strong market. So at the same time, it looks like small and mid-cap stocks are priced for some kind of recession risk. It also looks like big tech and the broad markets have no pricing in of recession risk at all. I mean, that's been the thing that really just doesn't make a whole lot of sense to me, is why are small and mid-cap stocks falling if the Fed's going to be cutting rates and the economy's just fine? Maybe small cap stocks have been snitching this whole time that maybe this market is totally momentum driven. Maybe the economy is actually going to weaken. If that's the case, we have big problems. Now, on a statistical kind of probability basis, I have no way of obviously proving this. These are just my estimates and my numbers. I think there's a 75% chance that the economy is not ultra weakening right now. There's not all of this recession fear that's going to come out over the next couple of weeks, that we just get a 5 to 10% normal correction because momentum has slowed down in AI stocks. And you see your big tech names come down, and then the rest of the markets can kind of get a footing at lower prices and start to rise from there. As long as we get continued narrative of Fed rate cuts, a soft landing, I think Tesla stock will do very well after this correction event. And I think there's probably a 75% chance that over the next couple of weeks, this is just a small correction. Things will be fine and great. And ultimately, Tesla stock will benefit from a reset in momentum, a correction in big tech a lot, because that means more money is going to go back into Tesla. Remember, over the past couple of weeks, there has not been a lot of money coming into our markets. There is stretched liquidity like you have never seen before. That's why small and mid-cap stocks have been doing poorly. AI stocks have been doing well. That's one reason. There's just not a lot of momentum or liquidity that is feeding into this momentum. Nvidia going from, 400, 500, 600 billion dollars in market cap to 2.3 trillion. That is a huge gain. Where's that money come from? Now, again, in the event that we do see retail sales this week come in really bad, the expectation is positive 0.7% month over month. Last month was negative 0.8%. So if that were to be the case, you would be basically net zero for 2024. But if you come in like negative 1%, you're going to be net negative almost 2%. For resale sales, that's a big problem when GDP is really comprised of people spending money. At least 70 to 73% of GDP is comprised of people spending money. So it really comes down to the data this week as to, is this just a correction or does this turn into a crash? Again, couple things that I've noticed: small cap stocks like Tesla, interest rate sensitive names, have been really underperforming in a market where they should be outperforming. If we're really going to get 3 to 4 Fed rate cuts in 2024 and a soft landing, that's the optimal kind of scenario, given rates have went from 0 to 5.5% in the last 2-ish years. That's the best thing you could ask for. No recession, Fed rate cuts should be good for small cap stocks that are trading at almost record low valuations. It has not been. That's kind of one of the things that leads me to believe this could be a larger kind of crash or correction. But I do think a 75% chance that this is just a correction, things are fine. 25% chance or so that this is a larger crash, that you could see the economy start to weaken, maybe even inflation start to rise, bring up some stagflation fears. And let's just put this into context right now. Let's say there's, probably a 90% odds that we avoid a recession. I think if you were to ask the average Wall Street person, 90% of them would say no recession in 2024. That's starkly different from a year ago, right? Or 2 years ago, where it was like 90% of people thought there was going to be a recession, 10% thought there wasn't going to be a recession. Now, you get a crash, essentially. I think a lot of people forget 2022, when recession odds start to rise. So when data starts to get weak and more people start to talk about and discuss a recession and think it's coming, that's when you get the downside. Typically, stocks fall before a recession anyways, because by the time you're in a recession, you're 2 quarters into negative GDP, you already know you're in a recession pretty well. Right? So odds are you fall long before in the markets before you actually enter a recession. And right now, whereas everyone's so bullish on soft landing, if that starts to come into question and the odds of a soft landing start to fall, that's the bigger problem that leads to a larger crash. Now, specifically for this upcoming week, I do think Tesla's stock is probably going to fall to about 165. I think this downtrending line of support should be a solid level of support. And this is actually a kind of longer term bull flag pattern ever since July of 2023. You've been bobbing up here as resistance on this downtrending line, support as this downtrending line as well. If you break out or break under this line to the downside, then you likely get a gap down. That's what I would expect from this, bull flag pattern that we have here. Now, normally you break to the upside, but you're going to need some time. Eventually, this downtrending line is going to come down to about 220, and then you can break out above 220, 230, and see a larger rally into the 300s. That would be my expectation at that point. Now, again, in the near term, if you break under 165, then you could be looking at much larger downside from that point. I do think 165 will serve as a solid level of support for this week, but if you fall under that, then you kind of get into no man's land, and then 150 looks like the next target that would likely be hit at that point. Let me know what you think about this information down below in the comment section of this video. Is this going to be a correction? All things are fine and normal, or is this going to be a larger crash? Really, what I'm asking you is, do you think the economy is going to continue to be good, or do you think the economy is going to continue to be bad? And I honestly want to debunk this right now. It doesn't matter, right? If you have good data or bad data in terms of Fed rate cuts. Fed rate cuts are not going to be the thing that is good or bad in this market. Right. The ultimate fear is a recession. So if it looks like you're going into recession, no matter if we go from 3 rate cuts to 10 rate cuts in 2024, it's still going to be seen as negative because a recession is negative. If you have a soft landing and we even dropped to 2 rate cuts being priced in for 2024, that's probably going to be a great thing as long as the economy holds up. That's the real question. Does the economy hold up here in this next upcoming week and over the next couple of weeks? Let me know that down below in the comment section. Hit the like button as well as subscribe to the channel if you guys want to come hedge out your portfolio, get a little crazy over there, maybe do some speculative trading, high risk, high reward kind of stuff to hedge the portfolio in this next upcoming week. Over the next couple of weeks, volatility can indeed be your friend. Check out that link down below in the description of this video, as well as that follow the X account. It is Michael Tyler over there. It's free 99, costs you absolutely nothing to do. You guys enjoy the rest of your day and your weekend, and I will see you in the next one.